My guest today says Bitcoin is the safe bet after moving his firm's cash to crypto, and a pretty big chunk of it, 425 million of it. I like one quote where you said you were sitting on what, a $500 million melting ice cube. Why do you see it like that?
Well, for the last decade, I didn't pay much attention to macroeconomics. And I just thought of it as we had a conservative treasury policy and we had $500 million or more, and we're going to generate 2 or 3% interest on it, and we'll use it when we need it. But of course, over the past year or so, that interest rate went from 2 to 0. And then everybody woke up to the world of macroeconomics this year because we had the largest intervention of the Federal Reserve maybe in the history of the country. And that drew me into a deep dive, and I started studying the expansion of the monetary supply, and I realized that for the past decade, the monetary supply has been expanding by 7%. And the actual inflation rate on assets is not 2%. The inflation rate on assets is 7 to 8% if you were holding equity, and the inflation rate on a bond is 22% if you were holding the long bond. And now I realize that the estimate for the next few years has got to be 10% or more. And so when you start thinking about your cost of capital being 10% and you're holding 500 million in cash that's yielding 0, I realize my real yield is negative 10% at least for the next 3 years. And so I imagined $150 million getting burned or melted away, and it made me very anxiety-ridden.
The two classes that come to mind and are most popular, of course, Bitcoin and gold. Why not gold, Michael?
I considered gold, and then I started studying the two, and then I realized that gold miners are going to produce about 2% more gold every year. And then I realized that there's a possibility over the next 100 years that more than 2% of gold will be increased. But let's just say in the best of the world, for 100 years, we produce 2% more gold. That means $100 million will be debased down to $12.5 million in 100 years. But on the other hand, Bitcoin is exponentially going to infinity stock to flow. There's never going to be more than 21 million Bitcoin. So you're really talking about at most diluting $100 million of Bitcoin by 10 million over the 100 years. And given the fact that Bitcoin is an infinitely hard asset, whereas gold can be produced by human beings given enough incentive, I realized that over the long term, Bitcoin is the harder asset than gold.
Interesting. See, so when I speak to gold bugs, and I speak to many big gold bugs, their main argument right now is when the money starts leaving the bond market, which it already has, it will naturally flow into gold, and that's what will drive gold to $5,000, $10,000, $20,000 an ounce. What are your thoughts on that reasoning?
I don't think it's a very intellectually deep argument. For example, I do believe that money will flow from the market to something different. And by the way, gold would be my number 2 choice. But if you double the price of gold, you're going to double the incentive of miners to produce gold. And if gold goes up by a factor of 10, human beings have a way of putting capital into mining and ingenuity, and they'll invent better ways to mine it, and at some point they'll melt down their jewelry or they'll find other gold.
Right, but if we look at how many new gold mines, yes, they are still mining gold, but I mean a really big gold discovery. It's been years, Michael.
Given enough money and given enough wherewithal, no one's going to melt down their Bitcoin jewelry to sell it at a certain price. Right. And the key point here is if I put $100 billion into gold mining, I will produce more gold. How much more we can debate. If I put $100 billion into Bitcoin mining, I will produce no more Bitcoin. I will just produce more security. Right there. It's impossible. Even if you put $1 trillion into Bitcoin mining, it's impossible to produce more than 21 million Bitcoin. All you're doing is making the network better and safer. But at $1 trillion of gold mining, you will produce more gold. We're just going to debate about how much gold you're going to produce. I think that Bitcoin is digital gold, and that means it's faster I can move it 1,000 places in a couple of seconds. It's stronger. I can pledge $100 million of it for 3 hours in Japan on a Saturday afternoon, right? It's smarter. I can write a computer program that'll slice it in a million pieces and do complicated things with it. It's only going to get better every year forever because it's software. And what that means is people that are attracted to Apple and Amazon and Google and Facebook, because they're smarter, faster, stronger networks, they're going to be attracted to Bitcoin. Logically, that means, by the way, central banks weren't buying Apple, Amazon, Facebook, and Google initially. It'll first be technology investors, then it will be super high net worth individuals, it'll be private companies, it'll be public companies, it'll be the institutions that bought Apple stock. Eventually, Warren Buffett bought Apple stock, but he bought it 10 years after I bought it, right? So eventually then you read about central banks today buying the NASDAQ today, right? But 5 years ago, central banks wouldn't have bought NASDAQ stock. So maybe they'll get there, but it's going to be a natural adoption cycle with waves of other investors taking the asset position first.
Michael, I know that folks like, and pundits like Max Kaiser and Raoul Pal very much share your vision and your vision of Bitcoin. And they have very bullish calls on Bitcoin. I mean, Raoul Pal, the last one I saw was, it could go to 1 million. What kind of forecast do you hold?
I believe that the price of Bitcoin and the value of Bitcoin is going to go up as more people adopt it as their treasury reserve asset, as the technical utility increases, as the productivity of all the people that adopt it goes up. They'll sweep their cash flows into it. And then as the inflation rates of all the fiat currencies it trades in increases, and I'm talking about asset inflation rates, like the 10% a year. I'm not talking about CPI inflation rates. Those four drivers are going to drive it up. At what rate? I'm not a trader. I don't really respect traders, to tell you the truth. Like, I'm not in the market to buy it this week, sell it next week, and buy it back the next week. I'm more in the Warren Buffett school of thought, which is you buy it because you expect to hold it forever. And it will go up over time. I just don't know at what rate and to what level, except obviously I believe it's extraordinarily valuable.